Welcome to the latest episode of the Financial Frontier. I'm your host, Patrick Camuso. I'm very excited to introduce our guest today, Winston, who is the founder of Web3 Accountant. We're here today to discuss all things Web3 accounting, CFO, and taxes from a global perspective. So, this is going to be a very interesting episode. Winston, thanks for joining us today.
Thank you, Patrick. Yeah. So I'm the founder of the Web3 Accountant. We are a new group where we share crypto finance and compliance information. And also we are HR portal for anybody looking to join the Web3 accounting industry. Yes.
Fantastic, fantastic. And I think one of, the founding or initial reports and pieces of content that you've put out through your company, the Web3 Accountant, is this global tax report on cryptocurrencies. My firm at Camuso CPA, we've contributed to the US section of that, but I've gotten a sneak peek at this report and it's very comprehensive from my perspective, covering the tax and accounting implications across the globe when it relates to cryptocurrency. So, can you just give us a brief overview of that? What was the primary goal of creating this global tax report?
Yeah, I think with the global crypto tax report was in the last 1 year, there were many different people coming to me to ask about global crypto taxation. It may be because the individuals have crypto tax implications, or it may be because there are crypto subledgers that are looking to see how taxation would affect their software. So you would think that in the US or in the Australia where you have capital gains tax, this crypto subledger would be very more developed. But in countries like Hong Kong or Singapore, where you don't see capital gains tax, the crypto subledger industries might not be as developed relatively. Yeah. And then the other one is that there is a lot of Chinese people in China, for the bosses with the funds available, which is asking for like comments on taxation. They are looking to expand where should they put their headquarters and how are the what are the differences. So this is where I realized there is a shortage of crypto tax report in Chinese. So this is where I thought that such a tax report might be beneficial for people who is Chinese speaking. And the other one is I refer people to the PwC tax report. So PwC actually wrote a pretty comprehensive global crypto tax report for many jurisdictions. But there was something I find lacking inside that report where we do not cover tax incentive. So what are the different tax incentives that different jurisdiction do cover? And also individual taxation. So there's different components where that reports do not cover. So this is where I thought I create a report where other than people learning about taxation, they can check if they are missing out on some benefits that they should be maybe entitled to, and this might help CFOs or finance leaders make the next decision in terms of jurisdiction, where should they expand their next business to, because I think Web3 today is going global and with a lot of issues in different areas.
Well, I agree with you. Web3 is going global, and part of that is just due to the nature of Web3 in general. Part of that is due to the regulatory environment in certain jurisdictions, including the US. I even see a lot of US founders here, especially if they're doing token generation events, to have to add international companies in varying jurisdictions based off of the advice that they get from a legal and tax perspective. So yeah, I think that's great. The need for a global perspective on this is imperative. So I know you spoke a little bit to this, and I think it's kind of interesting where maybe like you were saying, there's not as much focus on the taxes and not as much support from a software perspective in certain jurisdictions. Can you speak a little bit more to that, along with any other striking differences that you've seen in how crypto and digital assets are taxed in different jurisdictions?
Yeah, so I think I'm very privileged to be the author of the report, the compiler of the report, where I get to deep dive into the different reports as I do the design of the report and and reread the content of the report numerous times to ensure the different designs are done correctly. And this is something that I'm able to bring a unique perspective to say that I want to say that if a certain jurisdiction is regulating the crypto taxation very seriously, this might not be the reason why a company should not choose that jurisdiction as the place of business. Because the reason why tax laws are coming out is because there's activity. And for businesses, while you might consider the tax implications of your business there, but that would mean you would be able to do more business there. So
Yeah,
that is what the biggest takeaway that I have from doing the report. So initially when I wrote the report, it was like, which jurisdiction gave the most tax incentive, or they are most tax friendly. But after I did the report and I deep dive into the different jurisdictions, as if we look at Australia itself, or even the US, where there is a lot of disclosures form, the 1099 DA form that requires to be submitted, or in Australia itself, where they have some tax regulation laws which requires the tax professionals to submit filings to the tax authorities if they realize something is wrong with the client's accounts, which is giving a lot of issues. But also in Australia, you have a place where you have digital assets company being listed on their Australia stock exchange. So this is like, what I realized is, with more tax laws going up in certain jurisdiction, that might be an underlying reason where there's a lot more crypto activities going on itself. But that being said, I also realized that we have countries like Dubai, Malta, Singapore, Hong Kong, that have tax incentive, and at the same time not having capital gains tax on the crypto itself. With the volatile crypto prices, I think we will understand why we need the capital gains tax to be out of the picture for many different countries. And with what I have mentioned for cross jurisdiction, this is where we would need specific tax planning. Yeah.
absolutely. And yeah, I agree with your points there. I see the capital gains exposure in the US related to cryptocurrencies really hurt a lot of investors and businesses who aren't necessarily aware of what can trigger those capital gains events. And a lot of times, there can be some unwanted surprises when they finally get to doing their accounting and taxes. So, yeah, I agree. If there's jurisdictions where you can legally avoid paying capital gains taxes, that is a huge benefit. And there's a lot of tax planning if you are looking outside of one country and you're selecting all these different jurisdictions. And that's really where, getting an overview using this report before you even start to go and speak to all different types of advisors can be really valuable, just to give yourself a broader education. And yet, to your other point, I think a lot of times, the more that you start to see these markets mature in different jurisdictions, you're going to start to see regulators take more of a focus on it. And that speaks to your point of what you're saying in the US and Australia. But again, if there's jurisdictions that are offering extremely favorable tax benefits like Singapore, that has to be a consideration. I do also think taxes are one consideration among many for, when a new Web3 startup is deciding on their jurisdiction. So you want to take into account the tax impact, and also speak with legal teams as well, and consider things just outside of taxes too. Now, in this report, were there any global trends or things that you're seeing, a similar approach across different taxing jurisdictions related to maybe like the information collecting, or just a general approach or attitude towards crypto in general?
Yeah, I think before we go into that, I just want to point out very quickly that the reason why the report was made by many different tax professionals from different jurisdictions, because I would think, today, for example, you are based, you yourself as a boss, you are based in Hong Kong, for example, and you are looking to explore into the US market. You do want, are you looking for somebody based in Hong Kong, or are you looking for somebody based in US to give you the advice? So this is where I realized that I am not competent enough to give the relevant advice in the different jurisdiction. That's why we brought together a team of people. So in this way, we are able to get more targeted and more specialized assistance, and we are able to get more quickly when we go talk about global tax planning, where we have different tax professionals working together on a case. And that is what I think a lot of my clients would prefer as well.
Yeah. And to that point as well, even when you get into advising these companies that are going to have, a multi-jurisdictional structure, a lot of times it's going to involve multiple professionals and tax professionals in each of these jurisdictions. So I think a report like this is extremely valuable from someone that's in that CEO position, and it's going to have to start building that team of professionals out. This gives you a good overview and framework to start with before you start going down this rabbit hole of hiring tax professionals in possibly several jurisdictions.
Yeah. So back to Patrick, your question on the tax information. So I think one thing I realized is a trend going forward in the last 1 year is the increase in the travel rule requirement, where we require exchanges to exchange crypto information with each other, and the number of jurisdictions that's participating is going up because no countries or no responsible people within the countries itself would want to be the person that's responsible for the country being on the blacklist. So that's why everybody is participating. So once everybody participate to transmit the information, that is where tax authorities are able to easily um, get information from the exchanges. That's where a lot of the funds are flowing through. And the other one is the CAF rule, which needs to be prepared by 2027. I do cover that a little inside my report on who needs to be aware of this. So in basic English, it is crypto service providers that needs to provide crypto transfer information to tax authorities by 2027. And many of the jurisdictions have been covered. To be honest, a lot of crypto flows are actually fund flows, and reporting fund flows in the CRS standards in the Web2 financial services industry is a common practice. So this is actually nothing new to a lot of financial services institutions which are licensed. But for many of the Web3 players, this might be something very new, and many of them are getting ready or getting prepared for such a system. So with such a system coming up in 2027, now it's 2024, it's a good time to get the accounts in order to make sure that the relevant systems are in place. And on this note, I think this 6 months, there are individuals that are coming to me to say, so previously, maybe a year before or others, I did not report my crypto income or employment income. So what do I do now, and how do I provide this information to the relevant tax authorities? But this is because they didn't expect, number one, for the tax authorities to be able to educate themselves to a level of understanding what is happening on chain. And number two, maybe when they started doing this business, they didn't expect it to explode. But in the last 2 to 3 years, I think the crypto business explode for many service providers, maybe content creator, maybe auditors, or maybe for accountants. So when they start receiving crypto, so there is this a lot of exchange of information that is provided, and so that's where I see at least moving forward, there's going to be more information required from this side to give to the tax authorities.
Absolutely, I totally agree there, and that's actually been a long-standing prediction of mine and Camuso CPA as well, because we've been seeing, that international cooperation at a smaller level between the U.S. and several countries since as early as maybe like 2017, 2018 through to J5 agreements, and now we've just seen, like you said, there's a lot more of that, and due to the global aspect of crypto, it's extremely beneficial to any of these tax authorities, because if you're on an international exchange and that X country has access to that data and they're sharing that with Y country, they're able to build a more comprehensive data set to find taxpayers that are not compliant. And the same thing that you're seeing with more informational reporting requirements in each country, I think is going to play into that, because they're collecting more data and then they're sharing it all, and they're just building a more comprehensive picture on each taxpayer. And we see that here in the US with the push with the 1099 DA that's going to be getting implemented next year, and more comprehensively in the following years. It's that same thing here. There's being more collected domestically, and then that's being shared internationally. And I'll also say that, at my firm, we're doing the accounting for people at Camuso CPA going as far back as, 2016, 2017 on a weekly basis. So I'm experiencing that same thing that you are, where people are coming to us and they're either realizing that, this is going to get reported to the tax authorities, or, oftentimes they're maybe receiving a tax notice where the IRS is making them aware that they do have information that's reported to them, or sometimes they hit a bottleneck where they haven't filed their tax returns appropriately, and now they need to use their tax returns to provide as to substantiate something to some other authority.
I think the one that they want to substantiate is off ramping.
Yes.
When they want to off ramp, that is the very direct impact. Where did the crypto come from?
Definitely.
If you paid your taxes.
And can you substantiate the cost basis information that you're claiming? Because that's, we saw the first criminal case for tax evasion here in the U.S. with the indictment with Frank Algren III, and basically that's the charges against him, is that he liquidated about 4 or 5 million of Bitcoin, purchased homes and all cars and stuff, but significantly inflated his cost basis information. So now he's facing significant jail time for that, 3 to 4 years for each incorrect return filed, and he filed like 3 or 4 of them allegedly incorrectly. So yeah, I'm seeing the same trends here in the U.S., and it's interesting to sort of get these same reports from all over the world. You start to see how there is a maturity from a tax perspective across all these different revenue agencies, and there's going to be a much stronger enforcement here in the future. So are there any countries that you sort of see that are lagging behind in terms of their tax frameworks related to digital assets compared to others, or are there some that are just way out ahead and more developed than others? Can you speak towards that at all?
I think one thing that I realized from this is, I think Dubai has been pretty hot. Dubai is the key tax key crypto HQ for Binance itself. And if we compare, it's not in the report itself, but I did compare the headline tax rates for the various countries itself, and you would see that Dubai itself has, although recently they started with a 9% tax rate, but mainly it's still 0%. And just imagine, you have this place where you have a crypto license, you have 0% tax, and then you have no capital gains tax, and you have low individual income tax. Why don't we do business there? So that is why that we can see how the whole Dubai, and Dubai. The other thing is they are also a financial center. Yeah.
Yep. Yeah. Actually, I was just recently at the Bitcoin conference and met a few people that own businesses and also investors that have taken that exact approach going to Dubai. So I think that's interesting that you note that extremely tax friendly in that country. So can you provide a brief overview on the crypto landscape in Singapore and how that's evolved over the past few years?
Okay, I think for Singapore itself, in the recent years, similar to the other countries, is stable coins have been coming up as the key topic that we need a license to. And in this year, April itself, they required custodians and market makers and even payment service providers to require a license if they touch crypto. So like, previously there wasn't such licensing available, and there wasn't such enforcing where we need to tell license holders that you need to keep the customer digital assets separately. You need to put 90% of them into cold wallets. Like, the regulators had to step in to enforce the customer digital asset protection. So in this case, there's where a lot of funds are flowing into the licensing and the license application sector. There was even in a recent 2 weeks ago, so when I told you about April and then there's July update, we require all license applicants to seek a legal opinion and also an auditor's opinion that, number one, their business is okay and the business is in order. Like, if we think about it, why did the regulators came out with such a policy this year when the application for crypto license in Singapore has been around for 2 to 3 years? So what I do understand is the sad truth is there are people who are not ready and apply for license. And the result is that the regulators have a lot of cloud applicants around. So they have to have such measures in place. Of course, it will increase the compliance costs for new entrants into the industry itself, but it would keep the retail investor safer. In the Singapore market itself, to be honest, with token 2049 coming, it's very exciting. There's a lot of events lined up, but crypto among retail users is still highly not encouraged. So because I think the asset is very volatile, and I don't think the regulators want a case where we have citizens on the streets saying that they have lost money due to crypto. So they do have set regulatory sandboxes. They do have license applications to support and the industry itself. But generally, for the mass public, that has not been going on. But the good part about Singapore itself is in terms of taxation itself, or accounting policies itself, the relevant bodies, maybe ISCA for accounting, the chartered accountants, or maybe the IRAS itself, the tax authorities in Singapore, they do come up with guidance to say, maybe for GST. So previously, when you actually buy or sell crypto on an exchange itself, it would be deemed as buying a goods, and then you would have to charge GST on it. So talking about 7% of the business tax itself. But then the IRAS came out with a specific notice to say that, okay, if you are just buying a digital payment token, then this is considered like changing of money, and then you do not need to have the GST itself. So one thing is, I'm very thankful for the Singapore government to look at, where are the activities going on and what are the issues that the crypto industry is facing, and they would step in to say, okay, does this make sense? Because at the end of the day, I think the Singapore government wants the business to grow, and they don't want the tax to be the reason why Singapore does not progress forward. And so that is something I'm very thankful to be a small country where we have such slightly easier conversations compared to other countries which are so big, and then you have to have cross jurisdiction, etc., conversations going on, and you can't change the different notice simply. But that being said, the government is also understanding that recession might be coming, and maybe election is coming. They have been giving up tax incentives for people to do business in Singapore, maybe for family officers, or for tax rebates, for to tell people that they understand the hardship that people are going through, maybe because due to the Ukraine war or the inflationary environment that we are facing. So there's a lot of tax incentive for people to do business in Singapore. And I'm proud to say that the Web3 business is growing. One of the phrase that people are saying is River Valley is the new Silicon Valley. So
Wow.
River Valley is a place in Singapore. It's a town area where, because in Singapore we have many of the crypto companies headquartered there. So many founders stay in different houses along that street. So
Yeah.
there's also with the many crypto activity happening during token 2049.
Okay.
Just one more thing I want to share is, I think with the amount of crypto funds in China, because previously there was a lot of crypto activities in China before China ban came along. So all the rich Chinese, actually a lot of their crypto funds flowed into Singapore. We were a beneficiary. Hong Kong started slightly later with their regulations, and despite that, we do see in Hong Kong itself a lot of the crypto license exchange, OKX, Huobi, they submitted their exchange license, and they do get they withdraw their application. This could be because of more stringent compliance costs in Hong Kong itself, but that has resulted in Singapore benefiting from the flow of funds. Yeah, so this is a part where Singapore crypto is booming in this area in terms of businesses.
Interesting. So it sounds like Singapore overall is pretty friendly from a regulatory perspective, but still focused on, putting safeguards in place to protect, all the bad side of this and to protect the retail
Yeah,
investor.
Patrick, since we are on this call, I would like to share with you something very interesting. So I do have many clients that are having headquarters in Singapore, but they do not have businesses in Singapore. So if you want to do business in crypto business in Singapore, you need to have a license. So how they go around that rule is, well, then I'm not going to do the Singapore business because, I can do global business, but having a headquarters in Singapore, that is where they would be having the benefits of having a 17% tax rates, the Singapore education system, the Singapore housing place, and all the other benefits, and I don't need to pay the Singapore compliance costs. So that's where we see many companies actually putting their headquarters in Singapore. Yeah.
Very interesting. Yeah, that's a great note for people. That's something to consider if you're looking at how to set up your company, because there can definitely be benefits to that. Yeah, so Singapore sounds very friendly. So what are, some of the biggest challenges that you see CPAs and CFOs face when it comes to understanding cryptocurrencies? Because I know at the Web3 Accountant, you're focused on, the education side of things. And I know, from our conversations that me among many others, you're speaking to many CPAs, CFOs, accountants, financial professionals. So, what has been your experience with that?
I think two things. One is finding the right people, so to find the right people to work for them, and number two is I think many of the CFOs that I speak to, they do not have deep Web3 experience, because today a lot of the different CFOs that I speak to are working in licensed entities, and licensed entities, they like to have a very maybe a 10-year or 20-year CFOs that come from a Web2 financial institution. So this is where the CFO thankfully bring with them a very strong sense of internal controls and strong sense of reporting requirements. But that is where they are very new to the Web3 space, where they do not really fully catch the maybe on chain or maybe the different tokens or the intricacies required for Web3 reporting. So this is one of the issues that I face. And the other one is, with the number of industries going up, I also see a lot of hiring issue, because in Singapore, while I tell you the rest of the issues are very friendly, the Singapore requires the company to hire Singaporeans, and there this is the manpower issue is something that many of the CFO they face to find people who are willing to work for them. So I mean, the solution to what I have just said is um, outsource the function. So since you cannot hire the relevant people with the relevant information, if your company is small, reach out to companies like Camuso CPA. They can do your accounting for a start. After your company become more established, then you in-house the function. This is the short and sweet solution that I offer to many of the CFOs that I speak to if you have a headcount problem. Yeah.
Absolutely. And, you speak to a great point there, because I think there's a huge opportunity for, up and coming CPAs and CFOs, because there is this combination of skills that's necessary where you need the fundamental tax and accounting experience and expertise, but then you also need to have this fundamental understanding of crypto and Web3 and being able to read on chain transactions and understand that whole world. So, there's a huge gap between that. And I see it every day in the market, whether I'm hiring or reviewing, other new potential clients accounting, the quality of that can vary. So I think there's a huge knowledge gap, and the people that can bridge it are going to be able to serve a growing and vibrant market. So I just think it's a huge opportunity. So, what advice would you give to CPAs and CFOs where, they want to learn more about crypto and Web3 and try to build up this skill set, and maybe they're coming from more of a traditional background? What advice would you give them?
Yeah, so I think one of the just maybe two advice. Number one is to be curious. So the interesting thing is that in the traditional finance world, the maybe let's say the fixed asset FRS financial reporting standards, it doesn't change for the last 20 years, not that I know of. So it's gonna stay that way. We have the leases new accounting standards that's coming up slowly, but maybe every 3 to 5 years the accounting standards would change. But over here, I think in the Web3 world, things change so fast. Previously the meme coins were a trend in the industry, and maybe you would need to learn how to do the accounting for it. But after that, then it became the RWA tokens, and then now maybe stable coins. So to constantly stay curious and up to date with with information from news portal, that is very important. And the other one is I will refer them to the accountants quiz portal itself, where over there's a lot of free resources, newsletter, articles as a phase one. And then if you want to learn more, do sign up with them, or even the Web3 finance course itself, or even just follow the Web3 accountants page itself. We do share a lot of free information. So I think with curiosity and knowing where to find the information itself is something that is very crucial for anybody that want to enter the industry for a start. Yes.
Absolutely, absolutely. And I also encourage everyone when Web3 Accountant releases this global cryptocurrency tax report, definitely visit their website, download that. But Winston, what is the best way if people want to get in contact with you individually, or if they want to get in contact with your company? What is the best way for them to reach out and contact you?
LinkedIn. So LinkedIn would be the best method. I would pass you the LinkedIn contact later. Yeah. So that on currently LinkedIn is the best method to reach me.
Fantastic, fantastic. Well, I really appreciate you coming on the podcast today. We covered a lot of ground, ton of great information. To everybody that's watching, I hope you took away some valuable information from this that you can implement in your practice or your company. Winston, thanks again for being a guest on the show. Until next time, I'm Patrick Camuso, signing off.